At the rate at which Tesla stock is dropping, most Tesla investors are no doubt at the edge of selling their shares at the slightest opportunity. Most investors hope for a positive turnaround in the value of the stock, especially since there are lots of potential catalysts that could cause the stock price to go up this year. But while investors are worried that Tesla's stock price has continued to drop, technical analyst Mark Newton has said that the stock is yet to hit rock bottom, and more dips are likely to be expected. Where does this leave Tesla investors? Hey guys, welcome back to Tesla Tomorrow. Tesla stock has been hit by several events that have surfaced over the past few months. While there is no particular cause for the stock trading lower than its actual valuation, there are still a few incidents to point at. First, the risk of operational miscues at Tesla has grown, and Elon Musk focuses on the newest company in his portfolio, Twitter. Second is the increasing competition in the EV space in the US, and globally as well, which has intensified in the last few years and has raised the risk of slowing growth for Tesla in 2023 and beyond. And then there are concerns about manufacturing issues at the pace of sales for Tesla in China amid an uncertain approach to COVID-19 policies. However, while these fears still persist, Fundstrat technical strategist Mark Newton still believes that Tesla has yet to reach its lowest point, and according to him, the previous year has taught most investors that it's almost a fallacy to buy their favorite stock just because it's trading for a low price. Why has Mark Newton said this? Let's find out, but before we do, if you like this type of content, don't forget to hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Mark Newton is a Fundstrat global stock strategist who believes that Tesla stock has broken down, and investors can't bet on the stock rebounding in the near term. Newton said in an interview with CNBC that Tesla stock has clearly broken out, adding that for intermediate-term investors, they have to rise almost above the area where it was broken. Newton stated, and was also warned, that going back to these levels would mean nearly doubling Tesla's current stock, and that investors really can't do that. He added that a major rebound is unlikely in the near term, and the stock only started falling about just 2 months ago, which means that fundamentals were still weak. He said the biggest fallacy on Wall Street is that it's immediately right to buy dips on something that's down 50%. If 2022 has taught us anything, it's that it doesn't necessarily work out well in a bear market. It could have a very sharp bounce, but I think it's premature to think about that level right here. Mark Newton believes that despite Tesla trading at levels that may not necessarily align with the company's fundamentals, buying opportunities would continue to present themselves. He'd also said that Tesla is a strong company, but the unpredictability of the market, along with several other indicators, has influenced some investors to lose faith in the stock. In November, Newton cited that Tesla may have a lot more downside from current levels at the time, and could potentially hit as low as $109 per share. He added that he sees a $165 potential downside, though the EV maker may hit $109 in an extreme case. Newton also stated that he expects the automaker to sell off between late December and March to May. According to the technical strategist, it's going to be a big decline, much bigger than many would even think possible. He stated that Tesla stock has been abnormally weak over the last couple of months, and so by citing this, he can see that the price really confirms this recent breakdown. However, this may cause some investors to be concerned, but it is good to consider this may be the very buying opportunity that Newton had previously discussed. Newton had said that when Tesla's stock gets down near $100 by the end of the month, there will be certain things that will line up that suggest that the stock is a trading buy, and it could have a very sharp bounce. Mark Newton believes that Elon Musk has very little influence on how a stock performs on a day-to-day basis. However, while that is true to an extent, it's also important to consider that the shares have been falling at periods when Musk sold Tesla shares. In 2020, Musk made a tweet about Tesla stock being too high. Tesla stock was trading at $760.23 just before Musk made the tweet, and then fell to a session low of $717.64 before falling even more. Likewise, between December 12th and 14th last year, the CEO sold off 22 million shares, worth almost $3.6 billion according to a filing with the SEC, causing Tesla stock to experience a significant drop. Also in November, Tesla's shares slid to their lowest level in nearly 2 years after Musk disclosed he sold another $3.95 billion worth of shares in the EV maker. So while Musk may not be a direct determinant of the stock performance, he still has an influence on the stock in some way. According to Mark Newton, it is too early to think that Tesla has made a bottom. He predicts that it will be in April or May before the stock finally reaches its lowest point. If this is true, then Tesla stock is expected to go up now and then drop later in the year, but then investors may also want to consider the fundamentals first. City Analysis Ite Michaeli also wrote in a new note to clients that he thinks Tesla's Q4 setup is improving. And according to him, the recent sell-off has been driven by legitimate negative developments, such as Tesla's China demand and market share in December, as well as other concerns that he does not think Q4 results alone are likely to resolve. Ite also said that he believes the weakening sentiment also reflects a lack of visibility on key go-forward items, such as 2023 auto gross margin bridge and also delivery and production outlooks, as well as a product cadence for new and refreshed vehicles. He added that these factors, along with Tesla's Q4 results and the company's investor day, could actually provide much-needed visibility and handholding on these topics, and that one alone could conceivably provide at least a temporary sentiment boost. Other firms are also changing their tune on Tesla. American financial firm Edward Jones recently changed its hold rating on Tesla stock to buy, and according to the firm analyst Jeff Window, he believes that Tesla's new product launches will allow it to take advantage of this expanding market. Jeff wrote in a note to investors stating that for the firm, Tesla's share price does not reflect its long-term growth opportunities. Aside from upgrading Tesla from a hold to buy, Edward Jones also added the stock to its focus list, despite economic headwinds that are potentially pressuring Tesla's near-term auto sales. Edward Jones also cited that global regulations on emissions and mileage are driving the growth of Tesla's EVs. And while competition is rising, they do expect Tesla to continue to have a significant presence in global markets. Jeff himself also admitted that the stock movement in previous years has been eye-catching. However, the possibility of Tesla maintaining significant market share in EVs as well as the success of its new business ventures ultimately depends on investor sentiment. Tesla has quite a lot to offer, and these are not in any way dependent on the company's stock price. It is only expected that investors want more from the company's stock, even though its fundamentals are quite incredible. However, since factors other than Tesla's business performance are controlling the stock, then investors will have to stay patient and remain optimistic on Tesla's performance when it comes to its stock price. According to Newton, there could be a buying opportunity for investors by the end of the month, when Tesla releases its fourth quarter earnings, although there is still near-term downsides ahead. He added that if the stock fell 10% during January, then it could make room for a 30 to 50% rebound. Newton seems to believe that Tesla's earnings call at the end of the month could discourage some investors from relinquishing their positions on the company, especially investors who are not buying for the long term. There are several factors that can spur Tesla's growth in this year, and by extension increase investors' hope at the car company and also its stock. Tesla can potentially lower selling prices without affecting margins, and in the same way, it can also increase car prices and still record increased demand for its EVs. This is one very key competitive advantage that it has over other EV manufacturers. Do you think that Tesla's stock price has yet to reach its lowest point? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you'd like to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there!